Time to time, as the presidential candidates' odds are changing, stock market are also having some sector rotation. Hence, it's caused some uncertainties in the stock market recently as well. Good afternoon, everyone. It's end of the month again, and welcome to our monthly market update series, where we will get you up to date with the global stock market while you're having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the stock market. Since we are doing this over the lunchtime, hence we'll keep it to 30 minutes. I will start the timer when we start. We'll cover the market highlights, major stock market indices performance, and the upcoming potential opportunities and risks out there. So are you guys ready? You may type in the chat. Just an important note before we proceed. Whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know we are not a licensed investment advisor and we do not manage customers' fund. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and your own investment manager. That way you have a better control over the decisions, hence you'll be able to get better results. If you're looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not take as a recommendation to buy or sell. Okay, let's start as usual. Let's start with the market highlights. Let's take a look on what happened in the past month, in month of August. So first of all, we have the cooling inflation. So the CPI has been trending down recently. Based on the latest data, it's already coming down to 2.9% level. And it's getting closer to the Fed year-end goals, which is a PCE inflation of 2.6%. So what does this mean to the stock market? So it means that the inflation are trending down and the Fed are likely to start to cut the interest rate in the upcoming FOMC in September. And also, after the CPI data, we do see that there is some uncertainties in the market. So how many of you heard about a lot of uncertainties in the market? For example, those news about there's a potential recession, there is some potential stock market crash. How many of you heard of that? You may type in the chat. Yeah, all right. So after the August dip recently, we do notice that there are some recession worries in the market. This is because the unemployment data in the US has been continuously going up over the past 4 months, and it is already exceeding the 4.3% mark. So this will cause some worries in the stock market, and people have some sell-off. We see some sell-off during the early August, where the Japan market crashed, and also at the same time, US market having a significant pullback. And other than that, we also in a rate high cycle for Japan market. So while we know that US market are likely to reduce their interest rate, but Japan market are starting to increase their interest rate. This is because Japan economies has been picking up recently, and also their inflation has been trending up as compared to the US, where the inflation has been trending down and the US Fed are cutting the interest rates. And this caused the unwinding of the carry trade. So what is a carry trade? A carry trade means that in the past, when the Japan have very low interest rate, a lot of funds borrow Japanese yen and they invest in the US stock market. And now with the Japanese central bank increasing the interest rate, people are selling off their US stocks in order to transfer the money back to Japan and return the loan in Japanese yen. And this caused some panic in the stock market. Hence, we see the early August sell-off. Especially, we do see that the Nikkei index crashing all the way down to 30,000, around 30,000 points before it rebounded. And also US stock market do retrace as well due to intensive selling. And on top of that, also with the recession concern in the market as well. And next, we also have the US presidential election. So in the earlier election debates, we do see that Donald Trump having some lead in the poll. But now with Kamala Harris coming in, now we see that Kamala Harris are the leading presidential candidates in the election. And this caused the market to have a sector rotation again, and with Kamala Davis coming in as a favorable president candidates, it do stabilize the tech stocks. Because previously when Donald Trump is in favor, all these oil and gas companies, financial stocks are more in favor. So we can see that time to time, as the presidential candidates' odds are changing, stock market are also having some sector rotation. Hence, it's caused some uncertainties in the stock market recently as well. So we do see that the uncertainty is likely to be last until after the US presidential election. And lastly will be NVIDIA's earnings, which will be tonight after market hours. And why I said NVIDIA's earnings could potentially cause some uncertainties in the market as well. This is because NVIDIA is one of the leading AI companies. So any one of you know what NVIDIA produce or what is the main products for NVIDIA here in terms of AI industries or in terms of these AI mega trends? You may type in the chat as well. Yeah, GPU. So as we know for AI, all these data center need GPU, and NVIDIA has been the leaders of the AI trend. They has been increased. They already benefit from this AI trend and having a lot of revenue growth. So if let's say tonight's NVIDIA's earnings is good, then it's good for the stock market, and it may cause the overall AI stocks to rally. But what if they miss the earnings or they are not able to produce the growth they shown early on? Then this may cause concern in the market as well, because people may take this as a slowdown in AI growth. Hence, NVIDIA's earnings tonight will be one of the most important earnings to monitor, especially if you are investing in AI-related stocks or those tech stocks as well. So, what traders and investors can do then with so many uncertainties around, even though we know that the inflation are cooling down, the Fed are going to cut the interest rate. So what investor or traders can do? So if the uncertainty is likely to last until post-US presidential election, just like what I mentioned earlier on, likely these uncertainties may last until after the US election. So, but we do see that there are still great stocks in the market, and with the dip in August, we do see that some of the stocks, or especially some of the tech stocks, already showing some good valuations around strong technical level, for example, strong support level. So as an investor, you may need to wait patiently for the good valuations level, and you only consider to enter when it's near to the strong support level, strong technical chart level. So this is what investor can do. Investor need to be very patient and wait at the stronger level, and make sure while you're waiting, you do a lot of your homework, like for example, study the valuation of the stocks. Make sure you select all these stocks in line with mega trends and so on, which I will share in the opportunity and risk section later on. And what traders can do then? So any one of you are traders instead of investors, you may type in the chat as well. I know some of you might be investors and some of you might be traders here. So if you are traders, you can type me in the chat as well. So what traders can do? Oh, while traders, they may still trade the strong support level, because we do see that recently, after some stability in the market, we do see some trend recovery in the Nasdaq 100 ETF and also the S&P 500, especially the S&P 500, which is nearing the all-time high now. So currently with the market near resistance level, as a traders, we also don't want to rush in immediately. We also don't want to go into the market immediately. We want to wait for some pullback to test some new support first before we enter our trade. So while traders may trade the strong support level, they may also trade intraday. So what is an intraday trader? Intraday trading means you enter a trade and exit a trade within the same day. So intraday trading usually will help us to prevent all this gapping risk or the volatility of the market, especially during the time when we have high uncertainties in the market. So this is what traders can do. Either you be patient and wait for a pullback and trade the strong support level, or you can switch around and trade intraday instead until market become more stable. All right, so after we covered the market highlights of the month, let's take a look on the stock market performance. Usually as traders or investors, we want to choose the best market to invest in or to trade in, because if you want to get a consistent return, we may want to choose the most consistent market. And the US market is the market that having the most consistent return over time and also most predictable return over time, because we have great companies out there that keep on beating their earnings, and also global brands out there that are having a worldwide global exposure. So first of all, let's take a look on the Nasdaq 100 index, which represents the top 100 stocks in the United States. So this index usually include those companies like Apple, NVIDIA, Amazon, and Microsoft, and so on. So Nasdaq, despite the uncertainties I mentioned earlier, it does rebounded after the early August pullback, and now are testing the all-time high resistance again. And this is because after the pullback, all these great stocks, some of them start to show some good valuations. And also at the same time, the presidential election odds changed during these few weeks because of the Biden stepping down and also Kamala Harris stepping up, and she is now the candidate that leading in the poll. So this stabilized the tech stocks, and the Nasdaq do continue to rally. But we need to be cautious because, like what I mentioned earlier, there are still a lot of uncertainties, especially we still have presidential debates ahead during September period. And also among these months, next month, early September, we do have all these important jobs data announcement as well. And since we know that the market now are quite sensitive to the unemployment data because of the recession concern, we may need to monitor these indicators as well, and these indicators may move the market big time. So as an investor or traders, you need to be very patient and only wait at the strong support area, especially those stocks that already shown great valuations in their stock price and so on. So this is important lesson. Even though we see that the market recovered, but we need to be patient because of the uncertainties ahead and only trade strong stocks with a good valuation and also good technical level or strong technical level, only we want to go in. So this is how investor or traders think. And let's take a look on the S&P 500, which represent the top 500 stocks in the United States. It also represents the US stock market. So we can see that even though over the 10 years, the return are lower than the Nasdaq, but based on the recent trend, you can see that it's stronger than the Nasdaq 100. It already near the all-time high, while Nasdaq just about to test the all-time high again after the early August pullback. So what does this tell us? The S&P 500 are stronger than the tech stocks. What does this tell us? You may type in the chat on your view, but based on our analysis here, is likely because of the funds are rotating into other sectors as well. Other than tech stocks, funds may see the uncertainties ahead, and they may start to rotate or diversify into other sectors as well. For example, defensive sector, utility sectors, or consumer staple sector. So we can see that there are some reallocation of funds into different sector by all these fund managers. We can see that there are some sector rotation ongoing, but we do see that the tech stock, when it pull back to a certain strong level, they are still showing good valuations and there are still a potential opportunities for us, because opportunities usually lies, or usually the best opportunities appears when there are a lot of uncertainties. And next, let's take a look on the China market. So as we know, over the past few months, when I update about China market, we know that China market likely could have bottomed, but what is their main economy issue? They have some structural economy issue in China. So you may type in the chat as well if you're aware of some of these crises or issues in China, in the property market or whether in the retail segment as well. So any one of you monitor China market, how was the Chinese economy doing, or how was the property market there doing? You may type in the chat as well. All right, so China, even though we do see that potentially it has been bottom because of the stock charts, looks like forming a support or forming a base, but we do see that fundamentally they are still having some structural issues over the nation's economy. For example, their property market has been slowing down, and the property sales are still slowing down in China, and there's a lot of overhang issue in China. And also at the same time, the retail segment, the retails in China are also slowing down with their CPI at 0.2% only, which means that people are contracting their spending, no longer want to spend a lot in those luxuries items, or no longer want to spend more. So people are tightening their belt because of the slowdown in economy. And we do see that recent retail sales, especially if you could follow any China retail sales news, they are cutting their spending on those branded consumer discretionary items as well, or especially those luxury items, all these luxury bags, luxury watch, all these are slowing, the sales are slowing down in China, especially those are European branded bags, all these branded cars and so on, has been slowing down. The sales has been slowing down in China. This also shown that people are cutting down their spending, and it could be a concern for the economy. So we need to continue to monitor the situation in China, even though you may come across a lot of opinions about the stock market in China are already very cheap with great valuations. But I would say the fundamental of the economy issues are still there. The structural issues of the economy are still there. So we may need to continue to monitor the situations over there, and whether there are some movement or the policies from the government able to overturn that. And if they manage to overturn that, then we may continue to monitor. We may start to monitor whether the stock chart or the technical chart for China indices, whether they are starting to turn into uptrend or not. And let's take a look on Hong Kong as well, Hang Seng Index. So Hang Seng Index, I would say they are suffering a double whammy. When US stock market pull back, they also pull back because they are exposed to the global stock market and global financial market as well, because China are a special district of China, and Hong Kong is a special district of China, and their stock market do exposed to global financial market as well. It's a free trade market. And also at the same time, they also suffer from the economic crisis in China, because a lot of people or China company do listed in Hong Kong market, and China people do invest in Hong Kong market as well. And with the economy not doing well, this affected the Hong Kong market as well, and it has been slow as well. And lastly, let's take a look at our local market here, KLSE, Bursa KLCI indices. So any one of you invested in local stock market, you may type me in the chat if some of you invested in the local KLCI market. So any one of you invested in local market here? Yes, I see some of you invested in the local market here. And can you type in how was the local market doing lately? How was the KLCI doing lately? Bullish, bearish, or no trend or sideways? Not bad, right? So this is likely because of the macro factors, because US start to cut down their interest rates, and also at the same time, like I mentioned earlier, Japan are increasing their interest rates, and this shown some currency, big currency movement going on. And one of the factors why KLCI recently relatively bullish compared to other sector, even though 10 years the KLCI has been coming down, but recently it's shown some sign of recovery. Why it's shown some signs of recovery? Because we do see that some funds may rotate out from the US to local Malaysia market because of the macro factors. With the Fed cutting interest rate, they may sell some of their position and invest into emerging markets. For example, like Malaysia in the Southeast Asia. This is because Southeast Asia also benefited with the slowdown or all this tech war between US and China, or the geopolitical tension between US and China. This caused a lot of companies, especially MNC, are moving to Southeast Asia. And Southeast Asia has been benefiting from all this supply chain movement, the factory movement from China to Southeast Asia. And other than that, Malaysia also benefited from the AI trend. With a lot of data center coming into Malaysia, this caused a few sectors to be more bullish. For example, our utility sectors and also our construction sectors and as well. So I would say Malaysia market now suitable to trade shorter term for all these macro factors. But in the long run, as an investor, in the long run, I would say US market still give us the best predictable return and also the best predictable growth because they have the most global brands out there. So how many of you are aware of some of these US global brands that are having high growth, even though they are already a mega cap companies or $1 trillion company, and also they are in line with AI trend? How many of you are aware of these US global brands that are able to provide us all these long-term consistent return? Strong tech stocks and so on. You may type in the chat. Yeah, Amazon, Apple, we have Meta, we have Nvidia as well, like the star of the year, Nvidia. And also we have other stocks like Meta, Microsoft, yeah, the next 7, except Tesla, which are having some strong competition from China due to the price war in EV. Other than that, I would say other stocks are great for long-term investing as well due to their strong fundamental and also global exposure and also in line with all these AI mega trends and tech trends as well. So in the short term, yes, Malaysian market, you can take opportunities if you are trading in Malaysian market, but you don't want to miss out the US stock market as well, especially when they are having a pullback and you could able to get into all these great stocks with good bargains. So of course, if you want to take opportunity of all these bargains, you may need to prepare yourself ahead and invest safely as well. All right, so let's move on to the next slide. So other than the stock market performance, I would say another macro factors will be money on the sidelines. And for those that are following our market updates over the past month, this point has been there over the past few months, and we are nearing to that point now with the Fed are expected to cut the interest rate in September FOMC. So what I said, money on the sidelines. First of all, we see a record of 6.4 trillion of cash on the sidelines, and they are parked in the money market. So what is the money market? Money market work like our FD, our fixed deposit, where when the funds sell their stock position and when they are holding cash, they may park their money into the money market funds to earn interest, overnight interest. Just like how we park our savings into our FD. Overnight or over the months, we can get back some interest over our cash using the fixed deposit. So for funds, they cannot park to fixed deposit, so they park into money market funds. So why the funds are parking their cash into the money market funds is because there are still high interest rate in the US. So what are the current US interest rate? If you are following the Fed funds rate, you may type in the chat as well. What is the current US interest rate? All right, so current US market interest rate, I would say US interest rate, not market, US interest rate is around 5.5%. And as a fund managers, let's say you park your cash in the money market funds and you get 5.5% return. Is it a good risk-free return? 5.5% of risk-free return is very attractive to all these funds. So they are more conservative first with all these uncertainties ahead. They may park their cash into money market funds first in cash position. But things may change when the Fed start to cut the interest rate. With the inflation coming down, like what I mentioned earlier in the first slide, inflation coming down, and nearing to the Fed target. So the Fed may start to cut interest rate, and some even speculate about a 0.5% cut, which is a two basis point 0.5% cut means that it's a more aggressive cut. So people are seeing that because of the inflation coming down, and there are some concern now about the unemployment, about the recession. So people are speculating that, and we do see that if let's say September FOMC, people are starting FOMC, the Fed are starting to cut the interest rate, the funds may rotate into stock market or bond market or into sectors that are benefit from the interest rate cut. So we may need to continue to monitor this movement, especially when the market are uncertain, and also especially when we are nearing September for a FOMC rate cut. So this rotation are crucial. We may need to monitor whether funds are start to move around into the sectors or asset that benefit from all this rate cut. So this, I would say, we need to continue to monitor. I don't have a crystal ball to predict the future, but we need to monitor the movement of the different sectors and also these funds. And lastly will be what to focus on the coming months. What are the risks out there, and also what are the opportunities out there? So an investor or traders, as I would say, as a responsible investor or traders, we do monitor our risks first before we look for the opportunities. So first of all is the inflation trend. So I would say this may affect the degree of the rate cut. So currently inflation are trending down. So we do want to see that inflation continue to trend down, so the Fed can may make decision to start the rate cut. But based on the latest FOMC in the past month, according to the press conference, it looks like they are considering a rate cut in September FOMC, which is a good news for the market. But the inflation trend is still an important figure to watch out for. And next will be the global slowdown in terms of economic growth, slower global growth. So for example, China still having their economic crisis, and we do see that all these retail sales, property market still not shown sign of strong recovery. And also at the same time, the Europe and UK still having a lower GDP growth compared to the US. And we also see that there are some lower earnings forecasts, especially for retail companies listed in the US. As I mentioned earlier, some slowdown in the consumer discretionary spending causes some lower earnings reported in some of those retail discretionary companies. And lastly will be, we may need to continue to monitor those US unemployment data, because the market are having some recession concern. But if let's say the coming months data start to trend down, then it will just likely enforce alarm. And the third risk you need to look out for is the geopolitical tension. We do see that potentially the geopolitical tension between US and China may still ongoing until maybe the next few years or maybe the next decades. So as an investor, we may need to take note of this risk while we invest. It doesn't mean that with all these risks we cannot invest, but we just need to properly manage them. And also lastly, the fourth point will be US election. Currently we know that they are still in campaign between Trump and also Kamala Harris. They are having their campaign, and we have some presidential debate over the September month, and also the election will be at early November. So whoever win this election may shift the nation's policies, the fiscal policies and so on. So this may affect the economy, may affect the financial market. So US election is an important event to watch out for, especially if you are an investor or a trader. And lastly will be the cyber attack. So how many of you heard of the CrowdStrike events? The CrowdStrike events that cause all the airlines to be halted, and a lot of systems cause a blue screen and hang. How many of you aware of that? Yes. So we do see that with all this geopolitical tension and time to time with all these mistakes from tech companies, it could cause cyber attack, or it could cause service disruption, and it should impact or affect the supply chain and so on. And we do need to watch out the chain reaction as well. So with CrowdStrike having issue, we may need to monitor what are the side effects or what is the chain reaction. And also at the same time, with all this geopolitical tension ongoing, especially between China and US. So cyber attack will become one of the norm, or especially when we are moving into the AI trend, AI system, all these are cloud computing, AI and so on. Cyber security become more and more important, and we may need to take note of all these cyber attack events, because they may cause disruption and also some concern among companies and so on. After go through all the risks here, let's take a look at opportunities. Because the risk, yes, risk is there, like I mentioned earlier, we are aware of the risk, we take note of the risk, but as long as we manage them properly by having a proper risk management system and enter stocks at good valuation and strong support, it's all right for us, because we have a proper system to manage them and not overexpose our portfolio. But when we invest, we also want to invest in the right place. That's why we take a look on the opportunities as well. So what are the opportunities out there? So number one point will be industries align with the key themes. For example, mega trends. So mega trends refers to things like AI, cloud computing, big data, and so on. So we can see that companies that are in line with all these mega trends, especially for AI or cloud computing, you can see that over the past years, their performance tends to be better compared to other more traditional stocks, because these stocks are having a high growth, because as the world shifts to all these mega trends, they are the beneficial of it. They are getting high growth because, like for example, Nvidia, when AI came in, suddenly their GPU able to sell how many 100 times of the volume they usually have. And especially when they are still the leaders on the AI GPU, they're able to command the market share and also be the leaders, command over the overall market share, and be the main players in the AI GPU segment. Same for cloud computing. For example, Microsoft, Amazon, and also Google. They are commanding some of the big players in the cloud computing region, and their revenue able to continue to grow as the world move into cloud computing segment, or move into the trend of cloud computing. And the next key themes will be upgrade cycle. So as we know, over the past years, Nvidia are in the AI portion, and the AI are booming. AI trends are booming, and most of the spending was done in the data center segment, which means that invested by all these business in those business, for example, Microsoft, Amazon, they invest all their capital into data center and upgrade their data center facilities to have this AI graphics processing unit. So after the trend finish on that enterprise region, which means that they upgrade their facilities and infrastructure, the next trend we see is moving towards the consumer side, where we may see more and more consumer electronics devices are having AI feature. For example, how many of you heard of AI smartphones? You may type me in the chat. How many of you heard of AI smartphones? Or AI laptops, or even AI tablets, and in future, maybe your AI smartwatch. Yes, so we have, nowadays, if you go to shopping mall, you may come across AI smartphones. For example, Samsung Ultra 24, the S24 Ultra with AI features. And laptops, nowadays you can see Microsoft powered AI laptops and so on. And tablets as well with AI built-in. So we do see that with all this AI function introduced in all these consumer devices, consumer electronic devices, the upgrade cycle may come, especially after 2020, we have pandemic, and 5 years after the pandemic is about the time people may upgrade their computer. So with all this AI function coming in, this may attract consumer to upgrade their existing laptop or smartphones into all this AI powered device. However, with the slowdown in economy, these themes may delay. This upgrade cycle may delay. But this is one of the opportunities you need to watch out for, especially maybe next year when the economy recover even further. Then this may be one of the key themes to watch out for, especially when you are investing in the stock market. Watch out for those companies that are building or selling all these consumer electronic stuff. And next will be the sectors that benefited from the favorite presidential candidates. As we can see the sign early on, when Donald Trump lead the poll, we can see that sectors that favored with Donald Trump's policies rallied. For example, financial sector, energy sector, they rallied ahead, especially when Donald Trump leading the presidential candidate poll. And when Kamala Harris leading the polls, we can see that companies, especially those tech companies, rallied, and also at the same time, all these green energy related companies rallied as well. So we can see that time to time, as they debate, as they campaign, as the poll change, all these different sectors rallied. Depends on whose policies benefit that sectors. So I would say this caused some uncertainties, but it also provided some opportunities for us. So if let's say you are concerned about this, I would say wait until the US presidential election over. But if let's say you study the stock and you know these are the great values for you to enter, you may take the opportunities of the sell-off to go into all these great stocks as an investor. All right. So this is one of the opportunities out there, because when uncertainties are high, you only can get great valuation, especially for investor. And the next opportunity will be companies that demonstrated resilience in slower consumer spending, or when economy slow down, these companies still show some resilience performance. For example, those companies that are having less exposure to China. If let's say you have high exposure in China, your sales mainly rely on China sales, then this company tends to not do well, especially China still having some economy issues. Or we want to choose some of those companies that having low debt and also strong cash flow. So what does this mean? This means that when we select stocks, we may select those that having a more balanced exposure. For example, 50% in the US, 50% in the Europe or other regions. Those kind of stocks, or stocks with low debt and strong cash flow. For example, they are fundamentally strong company, having low debt or strong cash flow. Because why low debt? Because under high interest rate environment, if let's say you are having a high debt, you may need to pay a lot of interest. But if let's say you're having a low debt, you're okay with it. And also strong cash flow as well. With economy slowing down, those companies still having strong cash flow and they still able to perform well or still able to expand and grow. So these are the companies that we are looking for. And lastly will be money on the sidelines, like I mentioned earlier. And this data usually updated only every few quarters by the US Fed data website. So the latest data I got still is the $6.4 trillion of cash in the money market. But the figures may change as time goes by, as different macroeconomic situations develop. And lastly will be asset rotation into the bonds as well. So with the Fed start to cut interest rate, we may see some asset rotation. They may move into the bond market or may move into the stock market. But this, you may need to monitor this, you may need to monitor the stock charts and also some funds movement. If let's say you know technical analysis, you can see that you can compare a few charts to see that likelihood of which chart showing the strong buying, which chart showing you the weak buying, and so on. So we do see that a potential asset rotation may happen ahead of the FOMC September or already start to move. So you may need to continue to monitor the market. All right, so with all these opportunities and risks out there, I would say even though you look at the risk, it may look scary. Some of you may feel that, I know some of you may think that this may look scary with so many risks out there, but don't worry, because in our workshop or even in our courses, we do cover that not only to trade up, but we also cover how to trade down as well. And also we do have a proper risk management system for you. So if let's say you're able to follow all these risk management rules, able to control your risk well, you will take care of all this uncertainty and risk out there. Especially you are able to trade up or trade down, then you become versatile enough to handle all these different market scenarios. And with all these potential opportunities out there, I would say the opportunities still outweigh all these risks as well. And in order to capitalize all these opportunities and risks, you may need to get yourself ready when the market pull back and to the strong support level like I mentioned earlier, and you're ready to take the opportunities. So what should we do in order to get ourselves ready? You can start to prepare yourself ahead of time and start to look into stocks that are showing you great valuations. And since this is just a 20-minute market update, we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in systematic, versatile, and also safe way. Even though I mentioned, Chye myself mentioned about all these opportunities, you may need to be a more systematic investor or invest responsibility because it's our own hard-earned money. So we do have a 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and also safe way. And we have the most systematic course in the market, the process. We have process step for every trading styles we have. For example, we have process map for investing, we have process map for trading, even for intraday, we have process map for that. And we have versatile strategies as well to handle all the market condition, trade up, trade down, or even market sideways, you can trade that as well. And we have a safe approach with proper risk management system as well. So we don't expose all our capitals unnecessarily. And we even market crash or in future, if anything happen to the market, we are still able to invest safely and protect our capital well. However, in order to do well in the stock market, you need to plan some time to practice and pick up the skill set while waiting for the opportunities like I mentioned earlier, and get yourself ready when the opportunities come. Also, we have a hybrid class for the coming intake as well. Hybrid class means face-to-face workshop available, and also at the same time, you can join online session as well if you prefer online. So do join us in this 3-hour webinar to find out more about it. The next webinar will be this coming Saturday, 31st August, Merdeka Day, 9:30 a.m. in the morning. If you're interested in this webinar, you may scan the QR code to register. And if you find the market update is beneficial to you, do recommend it to your friend as well because we do it monthly so you can get up to date with the stock market within 30 minutes. And that's the end for my presentation. I'll now open the floor for Q&A. So any questions you guys have throughout these market updates, you may type in the chat. So all right, I see one of the question is, all right, historically, September is a bearish month for US market. But with the interest rate cut in September, any possibility for the markets to trend up. All right, so yeah, historically, people may talk about a September dip. A September dip. This is one of the historical season pattern people mention about September dip. And yes, I would say if with the Fed planning to cut the interest rate in September, I would say it depends on the degree of the cut, 0.25 or 0.5. If let's say a 0.5 cut, it may cause more rotation into other sectors that are benefits from all these interest rate cut. For example, housing market and so on. Why I said so? Because let's say you are a fund, you are holding a lot of tech stocks, and the tech stock maybe at that point of time already rallied a lot. And if let's say the Fed start to cut 0.5, they may move to other sectors, take profit on some of these tech stocks and move to other sectors. So I don't have a crystal ball to tell you whether it will be a bullish or bearish during that month, but you need to monitor whether it's a 0.25 cut or a 0.5 cut, plus that at that point, where is the stock market? If let's say it's already overvalued because of the expectation ahead of the FOMC and the stock market rallied a lot and the stock already having a very high valuations, then that's the point you need to watch out whether the funds are taking profit after the good news. So I would say do continue to monitor the market and have a proper risk management and do double check the coming months inflation and also jobs data. Because if jobs data bad also, they may fasten or increase the rate cut as well. So all these figures we don't know yet because all these data depends on the upcoming few economy announcement as well. But it doesn't mean that we cannot invest or we must stay away. You still can be an investor to wait patiently near all these support level. And if let's say the stock market shown you some great valuation when the stock market pull back because of all these uncertainties or because of the rate hike, or not rate hike but rate cut, then it's an opportunity for you if you prepare ahead of time and identify all these great stocks with great valuation and a strong support level. So I hope I answered your questions. It still depends on the degree of the rate cut and also the upcoming economy data, especially on the employment and also on the inflation. All right, I see some of the question. Does a small rate cut really help Russell 2000? Why the rotation is favoring all these mid and small cap stocks? I would say if let's say a bigger degree cut, it will benefit the small cap or mid cap. But if a smaller degree cut, likely it still benefit only the mega cap stocks. So we may need to monitor that. And like what I mentioned earlier on, the upcoming jobs data and also upcoming CPI data still very important to monitor. And you may see similar patterns repeat last few months where when there are bigger inflation drop, funds tend to take profit and move to a smaller cap. But it's still up to how the market expects the Fed degree of the rate cut, 0.25 or 0.5. So for now, just monitor the movement of the sectors first and just have a proper risk management. All right, so why is rotation favoring the mid and small cap? All right, so if let's say a bigger degree of cut, it benefit the small cap or mid cap because the small cap and mid cap tends to, if let's say you are a small cap company, you are a smaller scale company, if let's say you are still having a high growth, you tend to have a more loan compared to those mega cap. So with all these small cap having a higher debt to service, then likely they may not doing well when the interest rates are high. But now we are talking about rate cut. So if more rates are cut, then it will benefit all these small and mid cap because they are able to reduce their interest of their loans because of the rate cut. All right, and last question, should we look at the ETF as well? Yes, as an investor, you can look at ETF as well, or even traders, you can look at ETF as well, especially those sectors that are benefit from those macro factors I mentioned early on. For example, like the utilities, the consumer staples are starting to pick up. And if let's say as an investor, you want to diversify into all these ETF as well, other than holding the tech stocks, you can do so because all these consumer staple stocks or all these utility stock, you may not, let's say you haven't do your homework and you may not research which company are the best in all these utility sector or consumer staples, you can diversify into the ETF. Instead of owning one single company, you owning the whole sectors of companies, a group of companies. So this may help you to stabilize your portfolio. So yes, we can look at the ETF as well as an investor, especially you want to be more diversified or want to have a more stable portfolio. All right, so I see some feedback about the QR code are not working. So yeah, we will post a link for you. We'll post a link for you in the chat as well. So if let's say the QR code are not functioning, you can click on the link as well to join our upcoming webinar, which is this Saturday during the Merdeka Day and at 9:30 a.m. And it will be a live session from Kathleen. So do come and join us. It will be a live session from Kathleen and do come and join us. All right, so with time running out and we are already approaching around 1:15, so we'll call it an end for this session. So thank you all for joining this market update session and hope you all trade well and prosper in the stocks market. And I'll see you again during the next month market updates. All right, so goodbye and thank you everyone and see you again next month.